good afternoon, friends. Once again on this Sunday at 3:30, I welcome you all on the second session of the live webcast for the final year students on direct taxes. We saw on the last webcast that was done for you was on 15th August, and then afterwards, today on this Sunday, and now it's going to be on all the Sundays from right now, afternoon 3:30. So your day is fixed, your time is fixed. And every time I'm going to announce is a topic for the next Sunday. So for this, we had already announced in the topic for today's discussion is income from business and profession. You at final C level, you guys must have already done the analysis. And I always tell my students in my lectures that please do all the topics of direct tax. Please do the ABC analysis. Put them certain topics in the group A, certain in the group B, and certain in the group C. Most important, less important, and least important. And if you do the ABC analysis, I think today's topic, the income from business and profession, does fall in the category A. Why I say category A is not because you like, I like, or you or I deal with day to day the income from business and profession, but it is the analysis of the past papers. And that tells us that this huge topic from section 28 going on to right up to section 44 is length and breadth of this topic, income from business and profession. If your concepts are clear, an extended topic on this is MAT Bhatt. Because to get a right answer, you are comparing your incomes under MAT versus income under normal provisions. Your AMT, the alternative minimum tax, and the MAT have the roots in this topic, income from business and profession. And therefore, I consider this as an important one. If you remember, the Finance Act 2016, which has done the N number of amendments in the topic of income from business and profession, which I call them by the word as recent amendments, gives the first kick, and the kickstart comes from section 28. They went and amended the section 28. And you have got that list of incomes which can be charged under section 28. Then the clause 10, A part, in case of those non-compete fees which are received or receivable in relation of not carrying out any activities of a business, or the word profession has now been added. Earlier it was only business. Now they have added the word profession. So now any non-compete fees which are received will be taxable under the head section 28. And when I am discussing this, I am taking up the first query, which is from the student Preeti Agarwal from Mumbai. Preeti Agarwal from Mumbai says, Sir, amount that is received under non-compete clause, will it continue to be now taxed only under section 28, or can it also be chargeable under section 45? Because of this amendment, are you going to charge it under section 28 always, or can it also be chargeable under section 45? 45 means capital gains. And my answer depends on the word if and but. If the non-compete fees which are received or receivable will be chargeable now under section 28, provided they are of a recurring in nature. Provided they are of recurring in nature. And tomorrow morning, if those receipts are not recurring, then they will continue to be charged under section 45. So what is the nature of the receipt? Depending upon that, you either put it under 28 or either you put it 25. Recurring nature brings it 25, 28, and the non-recurring brings it under 45. This is the answer to your query. Hope, Preeti, you are getting your doubt cleared at this stage. I'm going to take up the second question. But before I come to that second question, let me give the background. And the question is based on the section 32. 32 into bracket 1. When I'm talking about section 32 into bracket 1, I'm talking about depreciation on the tangible and intangible assets, which are normally used in a business or a profession. And on with the depreciation is normally allowed on the WDB that appears on the block of assets. And on that, normally the rates applied are according to the methods of WDB. Said and done. And we do provide depreciation at the end of the year. The question comes up from a student called Mahendra from Indore. He says, Sir, is it mandatory to provide depreciation? Is it mandatory to provide depreciation? And the answer to that goes yes. It is very, very mandatory. Meaning it's compulsory. No choice. Assessee does not have a choice whether this year he will provide depreciation, next year he will not provide, third year again he will provide. It does not depend now on the whims and desires of an assessee. There is a history to this. There was a case of Mahendra Mills Limited was a CRT, and the Supreme Court has given the ruling that what is depreciation is an allowance, and the allowance is to be allowed only when it is claimed. That was the Supreme Court's interpretation. Allowance is to be allowed only when it is claimed. So if SSE has not claimed, you cannot allow that depreciation. So in Mahindra Mills Limited, Supreme Court was of the view that depreciation, unless it is claimed, you cannot allow it. However, the judgment of Supreme Court in the case of Mahindra Mills Limited has been overturned by the subsequent amendment to the Section 32. And now what we have made is that depreciation, though it is allowed, still it is mandatory on the part of the assessee to claim it, and if the assessee has forgotten to claim it, AO has the power to provide the depreciation in the computation of his income. So we brought this amendment. After losing the battle in the Supreme Court, the government brought this amendment, and now, as of today, it is mandatory. This is the clarity, Mahendra. I hope you are getting your answer. Let me give you at this stage, from my side, a little more input on this depreciation. Normally what is said and what happens is, with all my respect to all caste, creed, but humorously it is said, humorously, that people who are mostly in this transport business, they first act and then they think. पहले काम कर देते, बाद में सोचते. I'm coming to a case of Sardar Dilip Singh Bagga. That case was decided in the Bombay High Court. And there was a similar case which was Nidish Transport Corporation. Nidish Transport Corporation in Kerala High Court. What was this? I'm referring to this Dilip Singh Bagga, the Sardar Dilip Singh Bagga. He bought the trucks. After getting the trucks, he got the possession, he made the payment of the price, made an MOU that I am buying these trucks, and started using it in his business of transportation. The year passed on, and at the end of the year, he claimed depreciation. He would disallow it on a fact that the Sardar Dilip Singh Bagga did act. He purchased the trucks, he made the payment, he started using, everything said and done. But in the RTO RC book, registration book, he has not got the name transferred in his name. Therefore, he cannot be called owner. That was the assessment officer's argument. The case went to the court. And the Bombay High Court has said, in case of Sardar Dilip Singh Bagga, that trucks are immovable properties. As far as MOU is concerned, payment is concerned, possession is concerned, use of that truck is concerned, I think Dilip Singh has done whatever he was supposed to do. Just because he has not made a change in the RC book, and that RC book does not amount to be the ultimate proof of ownership, therefore depreciation is allowable to the assessee called Sardar Dilip Singh Bagga, and similar view was adopted also by the Kerala High Court in the case of Nidish Transport Corporation. So both the different high courts have come up with a very, very similar opinion. I want to drive home this concept far and wide. In the sense, people will then argue Sir, what happens if it is a immovable property? If immovable property, I sign an MOU, I make the payment, I get the possession, I start using it, but I don't register the document. Will I be called the owner? And will I be entitled to claim the depreciation? ये सवाल उपस्थित हो सकता है. The answer to that is given by Supreme Court in the case of Mysore Minerals Limited. Mysore Minerals Limited, Supreme Court has already given a judgment that so long as payment has been made, possession has been obtained, and an agreement to sale is enough to prove the ownership, the final registration is not required for the purpose of Section 32. So even in a case of immovable property, the Supreme Court has allowed depreciation even though documents were not registered. So I think this Sardar Dilip Singh Bagga and Mysore Minerals Limited of Supreme Court, these two cases, I think very clearly give you an idea as to whether depreciation is allowed or not. Let's move further. मेरे पास एक और query आई है, and this query has come from a student from Priya Singh from Lucknow. Priya Singh from Lucknow says, sir, can a depreciation be provided on an asset called goodwill under Section 32? Can you provide a depreciation on a goodwill? So far there were different opinions and debate was going on, whether allowable or not allowable. But now I get a complete clarity from one of the judgments of the Supreme Court. And that judgment, if you are aware, in your classes, if you have done this case, is of Smith, S-M-I-F-S. Smith Securities Limited. The Smith Securities Limited, the case went right up to the Supreme Court. But what was this case? The case was of an amalgamation. Assessee has made a payment of an excess consideration over the value of net assets. मान लो net assets were worth rupees 100 lakhs, 1 CR. You made a payment of 1.20 CR. That means you paid excess how much? 0.20 CR. 20 lakhs you paid more. Now normally, when your payment is more than the net asset, the difference is always called by the word as what? Goodwill. And this is what you have been doing also in accounting. So now what happens? That 0.20 was paid more by way of goodwill, so assessee goes and claims a depreciation. And AO disallows it. When AO disallows it, the assessee, the Smith Securities Limited, takes up the case for appeal and goes right up to Supreme Court. Now, while giving the verdict, the Supreme Court has opined, and their decision has come basically on the basis of one of the explanation to the Section 32, and that is explanation number 3. In that explanation, they have said that assessee can provide a depreciation on an intangible assets like patents, trademarks, franchises, and then toward the end it says or any other business or commercial rights of similar nature. Any other business or commercial rights of similar nature. And today, this excess payment of 0.20 lakhs is a payment has been made and you have got those business rights or commercial rights of a similar nature, and therefore depreciation can be allowable on the goodwill under expression 3 of the section 32(1). That is what Supreme Court has said. So whenever I give an answer whether allowable or disallowable, I should be able to tell you exactly what explanation 3 says of 32(1) or what that case law says. And we need to take a support from that. There is another question that has come up here, and this is completely based on one of the new thing coming for the first time for November 2017 exams. Is the case of ICDS, Income Computation Disclosure Standards. And the student Vijay from Bangalore is saying that, sir, these ICDs, whether they are there in the syllabus for November 17, answer is yes, they are there. And he says if they are there, which ICD deals with the tangible fixed assets? Which ICD deals with the tangible fixed assets? My dear friend, the Income Computation Disclosure Standards called ICDS are in syllabus. They are 1 to 10, and the one which deals with the tangible fixed assets is the ICD with the number 5. The ICD number 5 deals with the tangible fixed assets. And what does it say? It says that number 1, when a person owns any tangible fixed asset jointly with others, you are a jointer. Then the proportions in which you are owning jointly has to be disclosed in terms of actual cost, in terms of accumulated depreciation, and in terms of WDV. So your cost, your accumulated depreciation, and your WDV all should be grouped together in a proportion of your ownership of the tangible fixed assets. Not only that, the details of such tangible fixed assets have to be maintained separately, indicating the joint ownership in the tangible fixed asset register. This is what ICD number 5 is talking about. Not only that, as far as the capitalization part is concerned, the ICD further goes and says that the expenses which are incurred on a startup or commencing of a project, they all need to be capitalized. They all need to be capitalized. And after the commercial production begins, whether it is for a sale or whether it is for a captive consumption, those expenses will have to be treated as a revenue expenditure. This is one of the requirements of the ICDS. So ICDS 5 talks about joint ownership as well as about the capitalization as well as the revenue nature to be considered in the computation of income. Is this getting clear, Mr. Vijay? The ICDs are in syllabus, and you need to know the important ICDs, particularly dealing with depreciation, particularly dealing with 3617, that is with the bad debts. All that you should know what this ICD means. Purposefully, I am taking this discussion right now. I could have kept it just a little bit later on, but just to make the concept very clear, okay, what I talked about just now about the ICD number 5. Here is a question that comes from Kalpana Deshpande from Pune, and that is also again with ICDS. But the difference you are going to make it, okay, there the ICDS were income computation disclosure standards. Whereas here in this question, what is referred ICDS followed by the word limited is the name of an SSC. SSC का नाम है ICDS Limited. उसे उस ICDS के साथ कोई connection नहीं है. It's no way connected. They are kilometers and kilometers away. Only the name is reflecting that same word called ICDS. Now, what this question the student has asked is basically with regard to the depreciation, who should claim it, whether lesser can claim it or whether lessee should claim it, and what is the supporting case law. Let me tell you, the preamble and the preamble of section 32(1) puts not one condition but two conditions, and two conditions should be simultaneously present. What I said should be simultaneously present, both. So many people call it also by the word as twin conditions. I call it two conditions should be simultaneously there. Number one, the assessee who claims depreciation should be the owner and absolute owner. And number two, the assessee who claims the depreciation should also be the user. If you are an owner and a user, you can claim the depreciation. Whether you are a lessor, lessee, principal, agent, I am not concerned by what name you are being called. I am concerned whether are you the owner, are you the user, and if these twin conditions or two simultaneous conditions prevail, you get a benefit of depreciation. Is this clear? Now coming back to your question, sir, what is the supporting case law? And there is a supporting case law by the assessee called ICDS Limited, was a CRT in the Supreme Court. And this ICDS was a non-banking financial company, NBFC, non-banking financial company. It was in the business of leasing and hire purchase. Asset को lease पे देना या hire purchase पे देना, that was the main business. Now what this NBFC was doing was procuring the vehicles directly from the manufacturer, and then in the due course of business, what is the due course of business? Leasing and hire purchase. It will lease out to their customers, but the physical possession will always be with the lessee. Even in the RC book, the lessee has to put his name because he is using that asset. However, at the end of the financial year, the lessor goes and claims a depreciation. So AO disallows it, but your name is not there in the RC book, number one. So you are not the owner. And during the whole year, lessee was using it, lessor was never using it. So you are neither owner nor a user, and therefore you shall not get. That was what EO gave the order. Now the ICDS Limited went to appeal. They went to the Supreme Court. Now see how Supreme Court says. Number one, when you say he is not a user, what does use means? You physically use, and who is physically using? Lessee. Or use it in the due course of business. And what is the due course of business? Leasing out. And they did use this vehicle in the due course of business. So Supreme Court said they have used the asset. Number two, they say the ownership. In the case of this ownership, don't go by the RC book. Can a lessor call for inspection of the vehicle whenever they want? Answer is yes. At the end of the lease period, is the lessee supposed to return the vehicle to the lessor? The answer is yes. Who procured this and paid the money for this was the lessor. So lessor is the owner. It is in the modality of that business that they have to give the physical possession. Therefore, Supreme Court gave a view that both the conditions are satisfied. He is the owner also. He is a user also, because he uses it in due course of business, and therefore that ICDS Limited, being an NBFC company, can claim the depreciation. Can claim the depreciation. Very, very important judgment given. I hope this question has been properly answered. I think this query should not have come, but since it has come, I am answering it. This query should not have come, but since it has come, I am just giving a touch base to that. And that is with regard to 35 AD. It says, 35 AD does not apply to which assets? And are there any conditions? The question says 35 AD does not apply to which assets, and are there any condition? My answer to that is 35 AD does not apply to the acquisition of land, to the acquisition of the goodwill, and to the financial instruments. So your question was okay. It does not apply to three assets: the land, the goodwill, and financial instrument. Your part two of the question was, sir, are there any conditions? Yes. Earlier the condition was not there, but by the Finance Act 2014, when this Modi government came, they brought one condition. Finance Act 14. That whichever assets which are acquired under 35 AD and on which the deductions have been claimed, those assets should be held as assets for a period of 8 years from the year of acquisition. For 8 years you cannot transfer. For 8 years you cannot sell it. And if you do that, whatever deductions which are allowed will then be disallowed. So that is one of the conditions that came under 35 AD by the Finance Act 2014. Is this clear? Three assets: land, goodwill, financial instrument. Condition: yes, you have to hold it for a period of how many years? 8 years. This was a small provision on 35. Let's move further. Let's move further. And I don't know, this is on a question which is called as allowability of expense. or a non-allowability of expense? And if allowability, then under what section? This is with regard to the interest. I'm giving you the whole subject matter. The query has come up this from a student called Shreya Kapadia from Ahmedabad. And the subject matter narrated here is that the assessee has borrowed funds for setting up of a factory. He took a loan, and on loan he was paying interest. But for a certain period of time, the funds were idle, not required. So they were invested into fixed deposit in a bank. On that FD, the interest was received. And then what happened? At the end of the year, he filed a return in which he said interest paid to the bank minus interest received from the bank. And whatever balance part was there, and since it was a period of setting up of a factory, he wanted to capitalize. And you disallowed it. Let me put it this way. Man lo, suppose you have to pay interest on loan is 100, but you have put it in FD, that loan amount, so you got some interest. So 20 was the interest. So 100 minus 20, how much you paid net to the bank? 80. 100 minus 20. Now what you are trying to do is 80 you want to capitalize because this is during that pre-construction period. And AO disallows. He says, no, this is wrong. You capitalize 100 here, not 80. And that 20, you don't minus here, but 20 is your income from other sources and it should be taxed there. I think AO was right. Assessee was wrong and AO was right. That's my opinion. Because the interest received from a bank on a fixed deposit, my dear friend, interest received on a bank FD is always taxable under what section? 56. अब जाकर देखिए 56 writes that interest received on fixed deposits are to be taxable as income from other sources, full stop. Now where is the question of minusing here? So I think AO was right. Number two, assessee was little bit overwise in claiming as a deduction from 100 and not taxing under 56, because when bank give you that interest, did the bank say that you cannot use the interest? You use it only for construction or repayment of that installment? Nothing was said. So you were free to use. You can use here, you can use somewhere else. Therefore, it was your normal income. Where is the question of minusing from the capitalized amount? Again, I am saying, therefore, AO seems to be right in this allowance. But my opinion does not carry any weightage. I want something solid proof to drive home this argument. And that solid proof evidence is by way of citing a case law. If you want to write, you can write down. The name is Tuticorin, Tuticorin. I repeat, Tuticorin, Tuticorin Alkali Chemicals and Fertilizers Limited by Supreme Court. Chujicon, Alkali Chemicals and Fertilizers Limited, Supreme Court का ये किस्सा है. Same scenario, same background, everything same. And Supreme Court has a point that the interest received is covered by Section 56, whereas interest paid to the bank on the loans is to be covered by the provisions of income from business and profession. These are two separate things. Interest to be capitalized cannot be deducted as a deduction under Section 57. And I think Supreme Court was absolutely right in giving this judgment. So I hope this query has been well answered. Your doubt has been cleared by citing this particular what you call the case. And this is again, I don't know why again this is coming, but this is based on ICDS, and this is Sima Mahapatra from Bhubaneswar. Sima Mahapatra from Bhubaneswar. And this is a question that arises with relation to Section 36 about bad debts. Which ICD relates to bad debts and how this ICD does provide a compliance to the bad debts based on contract incomes. Yes, I'll try to answer out this question. First of all, there is an ICD number 3, 1, 2, 3. ICD number 3 which deals with this. Let me tell you first of all that in case of a contract, the revenue is recognized, is already recognized on a basis of percentage, and then subsequently the income is written off as bad debts. But what happens here that we do not require any adjustment to the amount of contractual revenues because that particular thing has not been incorporated in the books. Now what has happened here? My 36 into bracket 1 into bracket 7 says bad debt should be written off from the books. When you have not recorded at the time of writing, how are you going to write it off? To make it more simple, say a percentage of completion method was followed, revenue is recognized, it is offered for tax in the return of income without recording into your books. Later on, a certain part becomes bad debts. So naturally you have to allow as a deduction. But you cannot write off in the books since it was not recorded earlier. So what is to be done? My Finance Act 2015 has made a change along with these ICDs. That when such thing happens, it shall be deemed to be written off as irrecoverable in the books. It is as good as written off in the books. This is what amendment came 2015, and it is in line and in conformity with the ICD number 3. So without writing off, still you can allow bad debts. ICD is accepted. My Income Tax Act has accepted it by the amendment of 2015. So I think this is also very, very clear now. I will touch up one or two last few questions that are left out, and that question comes up here, and that question is coming up from Rahul Nagpal from Chandigarh. Rahul Nagpal from Chandigarh says the section 44 AD about presumptive income. What is the status of 44 AD? When you say what is the status, I am making up a meaning of what you want to ask. Is that 44 AD, you compare on one side with 44 AB, then you know the status. 44 AB is about tax audit, where we say that if your turnover is crossing 1 CR, it is a compulsory tax audit. But 44 AD says if your income does not cross 2 CR, is less than 2 CR, but more than 1 CR, you can still go through a presumptive taxation under 44 AD, and no books are to be maintained, and therefore no tax audit. Complete contradiction between 44 AB and AD. Let me tell you, 44 AD prevails. That is a status. 44 AD ने जो बात कही है, it will remain. 44 AB cannot override. This is not only my opinion, but the department has come out with a press release, and the press release was made on 20th of June 2016. 2016 कि 20 जून को डिपार्टमेंट ने प्रेस रिलीज के दौरान ये जाहिर किया है कि 44 AD shall override the 44 AB. That means whatever the 44 AD has said, even though your turnover is more than 1 CR, no tax audit and no books of accounts to be maintained. That is the status of 44 AD. Number 2. Now compare 44 AD on one side and section 28 to 43 on the other side. They are all deductions. And a chapter 6, Roman 6 of the Income Tax Act on the third side. I say 44 AD overrides section 28 to 43. Matlab, no deductions which 28, 29, 32 allows, all the deductions will not be available. So who prevails? 32 does not prevail, 36 does not prevail, 37 does not prevail. Who prevails? Is section 44 AB. So 44 AB gone. All other sections from 28, 30 only prevails in 44 AD. Now you were asking about status, and the last answer to that is, what happens with chapter 6? And my answer to that is 44 AD does not override chapter 6. Does not override chapter 6 का मतलब है deductions of chapter 6 would be available. First of all, current year's losses, brought forward losses, all can be set off against the income of 44 AD. That's the first thing. Number 2, chapter 6 means 6A also. All your deductions of 8I C to 8I GGC can be claimed out of the income of 44 AD. So deductions of chapter 6A are always available. What is not available is from 28 to 43 as well as 44 AB's. This is the status of 44 AD. Are you getting clear about this? Now, what had happened is the queries that you had sent me by email Again, I repeat, is info@nsbhatt.com. Please do send. और एक बात से मैं आपको याद दिला देता हूं कि आज 27 अगस्त 2017 से लेकर till your exams every Sunday 3:30 we will meeting, and next Sunday's topic would be a related topic is MAT Math and AMT, the alternative minimum tax, minimum alternative tax and the alternate minimum tax. The MAT and AMT would be the discussions for your next Sunday, 3rd of September at 3:30. Till that,